2010 was a relatively good year for the apparel industry compared to previous poor performances in 2008 and 2009. And yes, the companies did face major challenges in terms of rising cotton prices and increasing wages in major manufacturing countries. But still, the global growth exceeded 4%, and for the first time in 2 years, we have seen positive performance in both Western Europe and North America. Having said that, looking at the apparel market in a wider context and comparing it to other industries, we can see that although consumers are starting to spend on clothing once again, it is at a more moderate pace than spending on other products. For example, prior to economic downturn, the growth in spending on apparel was more or less at the same level as growth of beauty and personal care, but apparel has been much slower to return to growth once the economy recovers. So this may indicate that consumers' attitudes shifted away from desire-based purchasing to more value-conscious needs. And 2011 might actually prove to be more difficult for apparel manufacturers than 2010, and this will much depend on how cotton prices are going to shape throughout the rest of the year and how consumers will react to the ongoing price increases. Until now, we have seen mixed response from the consumer side as far as the price increases are concerned. For example, VF Corp, the company behind brands such as the North Face, Wrangler or Lee, they have recently stated that consumers responded to higher prices as planned or even better than planned, which is indicating some level of customer acceptance at the early stages of implementing price increases. However, given that post-recession consumer confidence is still quite fragile, further price hikes in the second half of 2011 that have been already announced by leading manufacturers might lead to declining sales as consumers are likely to either hold off with purchasing clothes at a full price and only buy clothes on sale, or eventually stop purchasing higher priced clothing altogether. The biggest growth story of 2010 and 2011 is consolidation of Asia Pacific as the dominant region in the apparel industry. When we look 5 years back, in 2005, the largest region for apparel was Western Europe, followed by North America, and Asia Pacific was actually number 3. Since then, this ranking has been completely reversed, with Asia Pacific overtaking North America to become number 2 region in 2008, and 1 year later overtaking Western Europe to become the largest region. In 2011, Asia Pacific is expected to significantly pull away even further, and by 2015 the total value of apparel market in the region is forecasted to be 35% higher than in Western Europe. And China will account for almost 50% of total Asia-Pacific sales. But we still need to remember that although Asia-Pacific now leads the world for apparel overall, there are some categories where other regions are stronger. For example, North America is still the largest market for children's wear, and Western Europe is still the biggest region for women's outerwear and footwear. Another example here is Australasia, where per capita figures in swimwear are much higher than in any other region. So we can clearly see that climate, culture and gender all have a big impact on the specific category mix in different countries. Well, let's now have a look at China as the manufacturing hub for the apparel companies. The issue that is currently very high on the agenda is the wage inflation in China, which results in a number of companies relocating their production to lower cost countries. For example, Esprit has started to move their manufacturing from China to Bangladesh and Vietnam, and so did local player Li Yingfang, which has recently stated that China now only accounts for only 25% of their total manufacturing, and majority of clothing is produced in Bangladesh, Vietnam and Indonesia. If we have a look at some specific numbers, between 2005 and 2010, manufacturing wages in China increased by over 60% at fixed US exchange rates, whereas in Indonesia, for example, real wages have fallen by 6% over the same time period. Over the next 5 years, the global apparel market is expected to generate just over to 160 billion US dollars, which is a huge increase. China will generate around 58% of this figure, whereas a number of key Western European markets are likely to experience a sluggish growth over the next 5 years. And this is despite slightly stronger sales in 2010. The key reason behind this will be heavy government cuts in a number of countries, which are expected to erode many consumers' disposable income levels in 2011 and 2012. And secondly, consumers will continue to be cautious in their spending following the recent recession. Plus, the announced price increases might have a negative impact on volume sales, and as a result, on value sales might suffer as well.